All right. Good morning, everybody. Good morning, all you magnificent melonheads of the world. Happy Monday, everybody. Today's July 13th, 2026. I hope you all had a wonderful weekend. Our top story this morning actually broke late Friday. Apple is suing OpenAI for intellectual property theft. Isn't that interesting? Artificial intelligence and IP theft. It's almost like the entire industry is built on the theft of IP. But I digress. Also, Apple suing anybody for IP theft. That's kind of interesting. Ever notice the similarity between Samsung phones and Apple phones? Anyways, but I digress once again. So what's going on here? It looks like ever since OpenAI got into the hardware space, problems have been developing between Apple and OpenAI. They used to be partners. Remember Siri with ChatGPT and Apple Intelligence? That was like a year or two ago. The market kind of laughed at that idea. Not so much anymore. Now they're going to court. And some of the allegations Apple's making are pretty striking here. Talking about how Apple employees are being recruited by OpenAI. They're being encouraged to bring hardware to job interviews for, and I quote, show and tell. What the hell? Also, OpenAI coaching departing Apple employees on how to circumvent security procedures. One Apple employee bought an entire company laptop with him, bragged about it in text messages to a colleague. Yikes. You know, I heard an unconfirmed rumor that Sam Altman once bumped his head and accidentally had an idea of his own. It's just according to people familiar with the matter. I don't know how true that is or not. But again, the whole market, the whole industry is built on IP theft to begin with, right? They took the collective works of authors, journalists, writers, painters, musicians, fed it all into their large language models, and now they reproduce it for money. Yep, that's IP theft. So I guess it's not too shocking. And as all this is going on, now we've got a price wars breaking out between the big frontier labs. Now, this is great for business, though, a price war, especially when you've got rapidly commoditizing industry, very similar models, all similar performance, no moat for any of them. Now you've got a price war, and they're already losing money. I'm sure that's going to be great for this bubble. OpenAI and SpaceX both touting the token efficiency of their latest models, i.e., the lower cost of their latest models. Meta has priced their new Muse Spark 1.1. Oh my God, I hate the name so much. What an awful bit of marketing Muse Spark is. Anyways, they're charging 25% of what the comparable frontier labs are charging for their top models. 1/4 of the cost. Because, that's right, Meta doesn't care how much money it loses. Anthropic is upping its usage limits, or at least like constantly extending their usage limits. And then, of course, you've got the influx of cheap Chinese models. Guys, this space is commoditizing super fast, and they all lose money. So it's not going to end well, but they just keep pouring money into it. Case in point, Meta this morning, they're out with this story that the price tag for their Louisiana data center has now increased to more than $250 billion for their 5 gigawatt data center, $250 billion for one project. Hey, this is the same Meta that just a week ago told us they had overbuilt data centers and that they're already starting to sublet their computing capacity, or to rent out their computing capacity, essentially joining the ranks of the neoclouds. And you'd think, we already built too much of something. Seems like the only logical course of action would be to build even more for even more money, right? At Meta, anyway. Remember, they named the whole company after the metaverse and only recently stopped spending money on the metaverse. So, yep, they're doing that this morning. Taiwan Semiconductor, though, posted their best monthly revenue in the history of the company. And so, look, we talk all about this bubble, about all the signs that it's about to burst, but it hasn't burst yet. They're still spending money hands over fist. Taiwan Semiconductor's revenues prove it. SK Hynix stock just cratered overnight by 15%. That's just after Friday, when U.S. ADRs for SK Hynix rallied by 13%. The volatility in South Korea continues to be amazing here. The Kospi index was down 9% yesterday, plus or minus 5 to 10% moves on a daily basis over in South Korea. Moving off of the AI story here, we've got war in the Strait of Hormuz continued over the weekend. The U.S. and Iran trading strikes, the most strikes we've seen really since the MOU was signed. the MOU was a bad deal to begin with. It set the table for this fighting to continue. The writing has been on the wall, and still the oil market does not react. We've got oil is up about $2 today, $73 to $74 a barrel. The market is still not taking this conflict seriously, or there is just so much demand destruction happening elsewhere that the market doesn't care about what's going on. Either way, the missiles and the drones are flying. And speaking of the drones and attacks at sea, we can't talk about what's happening in the Strait of Hormuz without talking about what's happening in the Sea of Azov right now, between the Ukrainians and the Russians. What the Ukrainians have done over the last 8 days or so, the world has never seen, not even since the Battle of the Atlantic in World War II, when German U-boats were targeting Western shipping, have we seen so many commercial ships hit so quickly. The Ukrainians have hit more than 100 vessels in 8 days, targeting the ferries and tankers that are delivering fuel to the Crimean Peninsula. And Russian air defenses are just not showing up. They're not even trying. It has been a turkey shoot. The great Azovian turkey shoot has been happening in the water here. The Russians are suspending all of this shipping from the Rostov-on-Don all the way down through the Kerch Strait. This is affecting global fuel prices, guys. You better believe it. It's affecting global refined fuel prices. You notice the price of oil has come way down over the last couple of weeks, but the price of gasoline has not made a similar move. It's come down a couple of cents, but nothing like crude has, because the Ukrainian attacks on oil infrastructure have been very devastating. It's having ripple effects on the whole global market. Guys, drones are just changing everything right now. I mean, we can see it in the Strait of Hormuz. We can see it in the Sea of Azov. Asymmetrical warfare at sea, the advantage is to the attacker every time. No matter how good your fleet is, no matter how good your interceptors are, if the enemy can put up huge swarms of low-cost drones, there is very little anybody can do about it. Meanwhile, we've got some good news, I think, at Stellantis. I think it's good news. Deliveries in North America are way up at Stellantis. Now, I said deliveries, not sales. So until those cars actually sell, it's not necessarily good news. But hey, there's been a lot of bad news in the auto industry. So anything resembling good news, I'll take it. And last but not least, the Japanese are walking back statements that they made last week about using their pension funds to prop up the Japanese yen. It looks like that was more jawboning than everything. We'll talk about that one towards the end of the show. But first, we got to shrink my big melon of a head. Let's see what's going on in the world of finance. Don't forget that like button and that subscribe button so you can come back tomorrow and have your coffee with the melon heads, because we do this one every business day. Right now, the S&P 500 is lower by about 26 points, or 1/3%. It looks like the conflict in the Middle East is driving markets a little bit lower this morning, at least for now. The Dow is off by 18 points, barely moving, 0.03% in the red this morning. And the NASDAQ is leading the way lower, off by 341 points, 1.1% in the red. Tech is leading the sell-off here. That volatility overnight in South Korea certainly didn't help things. Looking over at the dollar, it's pretty much unchanged here, 100.94, lower by 1 basis point. I'm surprised to see the dollar not moving higher this morning. Typically, when we see oil heading higher, that brings yields and the dollar up with it, but that's not happening here. Looking over at the bond market, we've got yields higher across the board, but just barely. The 30-year yield is up by 1 basis point, 5.082%. The 10-year yield is at 4.578%. That's higher by 1 basis point. Still unable to break into that 4.6 range, although we get CPI tomorrow. A bad CPI read should send yields above that 4.6% level in the 10-year. Looking over at the 2-year, 4.227%. That's higher by almost 2 basis points. And the 1 month is higher by 1 point at 3.696%. Looking over at commodities, we've got metals are mostly red again this morning. Spot gold is at $4,061. That's lower by 59 bucks, or 1.44% in the red. Spot silver is down by $1.40, or 2.3% lower at $58.50. But I still like this shiny, even though it has been a rough couple of months for the shiny. Still sitting here above $50, almost 60 bucks. A year ago, we all would have been dreaming of prices like that. Copper, meanwhile, is higher by 0.9%, Platinum lower by 0.4%. I'm sorry, both of those are higher. Copper's higher by 0.9%. Platinum is higher by 0.4%. Palladium is lower, red, by 0.4%. And crude oil, I mean, it's up 3.1%, $2.22, but still with all the missiles flying, 73.64 is the best the oil market can muster here for August WTI futures. Looking over at Bitcoin, it is a rough morning for Bitcoin, $62,435 as priced on Coinbase. That's down by $1,300. Again, the conflict in the Middle East, the sell-off in tech probably driving that. Although Bitcoin had a decent week last week, it managed to trade sideways. Again, the chart looks like it's rolling over here. All right, let's talk about this top story this morning, though. Apple sues OpenAI, alleging trade secret theft, says scheme was at every level. Again, this story broke late on Friday at every level. Apple on Friday sued OpenAI in federal court in Northern California, alleging trade secret theft, saying that the AI lab took the iPhone maker's intellectual property in order to develop its own consumer hardware. This much is clear, however, at every level, from members of its technical staff to its chief hardware officer, and in coordination with business partners, OpenAI has been stealing Apple's trade secrets and confidential information, the company said in a legal filing. It's a shocking reversal for the two companies, which entered into a high-profile partnership in 2024 when ChatGPT was integrated into iPhone's operating system. OpenAI CEO Sam Altman visited Apple's headquarters for that announcement, but relations between the two companies have chilled since OpenAI announced plans to enter the hardware industry last year when it bought former Apple designer Jony Ive's startup called IO Products for $6.4 billion. Apple's updated version of its Siri assistant, which is coming out this fall, is based on Google's Gemini AI models instead of OpenAI's technology. Most of Apple's allegations involve former employees who've interviewed with or joined OpenAI. Apple alleged that OpenAI's hardware chief, Tang Tan, who is former Apple vice president, has directed Apple's employees interviewing at OpenAI to share Apple's secrets as part of the interviewing process. Tan is named as a defendant in the suit. He's directed job candidates still working for Apple to bring actual parts from Apple to their interviews for show and tell sessions in which he and his team at OpenAI can elicit still more Apple confidential information, Apple said in the filing. Apple alleged that OpenAI coached departing Apple employees and how to evade security processes when leaving the iPhone maker, and that Chang Liu, a former employee who joined OpenAI, stole an Apple laptop. Liu was named as a defendant in the suit. Yikes. That's some pretty strong allegations there. It was a really bad week for OpenAI. There was a number of things. There was another story with the New York Times where they got caught lying in their other IP theft lawsuit with the New York Times. They were caught lying in discovery. Another OpenAI safety executive just quit over the weekend. Guys, this company may not survive long enough to IPO. Remember, CFO Sarah Fryer does not want this company to IPO. She said the books aren't ready, even though Sam Altman is still trying to push it out the door. And the more stories like this pile up, the worse it gets. Oh, and we got a price war on top of that. That's fun. OpenAI, Meta, and SpaceX AI, I guess. Okay. OpenAI, Meta, and SpaceX AI compete for more cost-efficient AI models. Okay, so cost-efficient AI models, what you're looking at here is a price war. They don't want to say it because it's not good for my stocks, bro. But yeah, cost-efficient AI models equals price war. 3 prominent AI developers released new models over the past week. They all promise to be more advanced, but their biggest immediate selling point may not be what they can do, but how little they charge to do it. OpenAI said its most advanced offering, GPT 5.6, is designed to complete more work while using significantly fewer tokens, a unit of data processed by AI models. This will make the software far more cost-efficient for customers. Grok 4.5 from Elon Musk's SpaceX AI is billed as having twice the token efficiency as comparable models from other firms. And Meta's platform, Meta is making the price for its Muse Spark 1.1 very attractive, CEO Mark Zuckerberg told Bloomberg, and that's putting it mildly. Meta is pricing Muse Spark. Oh my God, that name. I can't stand that name. Meta is pricing Muse Spark at 25% of what Anthropic and OpenAI are charging for their latest models. That is a price war. And OpenAI and Anthropic, they're trying to IPO. They need to make their books and their revenue look better. They can't compete with that. The renewed emphasis on cost coincides with business customers scrutinizing AI spending. Earlier this year, firms encouraged employees to outdo one another by using AI as much as possible, a practice known as token maxing. But in recent months, some companies have imposed tighter limits after being hit by sticker shock, in part due to developers like Anthropic switching to usage-based pricing rather than simply charging a flat subscription fee. As businesses get more cost-conscious, they're looking for other solutions, said Gil Luria, and there's no shortage of alternatives. Chinese tech companies like DeepSeek have flooded the market with more affordable OpenAI models. While these services still lag behind the most cutting-edge options from U.S. firms, the software is good enough to field many day-to-day duties. All right, so you got OpenAI, Meta, and SpaceX, along with Anthropic, all racing to cut their prices somehow while you've got this big influx of Chinese models. That's a race to the bottom in price, and none of these companies make money. That's the important thing. They all lose money on AI as it is, and they're all being pressured to lower prices. Losses don't get smaller when you lower prices. And you'd think they'd be like, okay, well, maybe we'll build fewer data centers since we're going to lose even more money. No, we're talking about Meta here, folks. Meta's Louisiana data center to surpass $250 billion price tag. $250 billion, $250 billion. Meta has committed to spending an additional $40 billion on its sprawling data center campus in Louisiana, pushing its total expected investment beyond $250 billion for the site as it continues to grow its AI computing footprint. Meta announced Monday that it will expand the project in rural Louisiana to at least 5 gigawatts of computing power at a cost of $50 billion. It had previously announced a $10 billion investment for the data center and surrounding community. Bloomberg reported in May that Meta was planning to spend an additional $200 billion on the project, largely for the expensive computing chips that will go inside the nearly 4,000-acre campus. That brings an expected total for the site to at least $250 billion, according to people familiar with the matter. Meta hasn't publicly disclosed any expenses for the project beyond the $50 billion. The Richland Parish, Louisiana-based data center is Meta's largest and most ambitious to date, and the high cost has led to additional financing by outside investors. Blue Owl Capital, which owns an 80% stake in the project, has turned to Wall Street for billions to help fund the construction. And that's just my favorite part. That is the cherry on top of this poop sundae, that Blue Owl Capital, the worst offender in the private credit space, who has had the biggest stampede for the exits out of all of these funds, that is who owns 80% of this $250 billion project. And of course, they're using private credit to raise the money to build it, all using off-balance sheet financing arrangements. So Meta doesn't have to report in their quarterly earnings just how deep into debt it's going in order to build this garbage. And just a reminder, they're all losing money and they're all lowering their prices as they do it. But like we said at the beginning, it's not stopping them from spending more money. And proof is in the pudding. Taiwan Semiconductor just reported a record month for revenue ahead of a critical earnings report on Thursday. Taiwan Semiconductor, or TSMC, just reported a record month for revenue as demand for its chips soared, and analysts think there's more to come. The $2.25 trillion company said its net revenue increased by 67% to 442.6 billion new Taiwan dollars, or about 13.2 billion US in June. It brings revenue for the period covering April to June to 1.27 trillion new Taiwan dollars, or about $40 billion, and makes June the best month Taiwan Semiconductor has ever seen for revenue. So look, guys, the AI bubble may be about to burst, but it has not burst yet. The spending has not slowed, not even a little. The losses are still getting bigger. Nobody's still making any money off of this other than the hardware manufacturers, but the spending hasn't stopped. Meanwhile, SK Hynix shares plunged the most on record in deepening Korea sell-off. The volatility in Korea is just nutty here. South Korea's AI-fueled stock rally came under renewed pressure Monday as SK Hynix tumbled by a record 15%, underscoring growing investor concerns that the boom has become overstretched. You think maybe they got a little overstretched? I don't know. We don't need to rush to these conclusions. Traders pointed to fears of lower than expected earnings and a rotation into the company's newly listed American depository receipts, which surged 13% in their debut on Friday. The sell-off sent the benchmark Kospi index down 9% and triggered a market-wide trading suspension. Again, circuit breakers every day. Guys, if the circuit breaker is blowing in your house every single day, do yourself a favor and call an electrician before you burn your shit down, because there's something majorly wrong with the wiring if you're blowing a breaker every day. Korean regulators haven't figured that out yet. I wish them luck. Peer Samsung Electronics Group dropped nearly 11%. Foreign investors offloaded 1.7 trillion won, or $1.1 billion worth of Kospi shares on Monday, with selling and SK Hynix accounting for most of the amount, according to exchange data compiled by Bloomberg. It was the latest sign of how volatile the Korean market has become after the AI boom drove massive outperformance versus global peers. Less than 2 months after joining the elite trillion-dollar club on the feverish rally in memory stocks, SK Hynix market cap closed the day at $875 billion. Samsung's valuation also fell below that milestone, with both stocks down at least 30% from peaks last month. And look at the SK Hynix here, or not the SK Hynix. This is the Kospi index. Another big red candle, falling 8.95% yesterday. This thing was at 9,361. That was the peak in June 19th. Now 6,806. This chart is rolling over it like crazy. And again, it seems like perfectly reasonable trading activity here, right? When an index rallies several 100% in a span of just a few months and then drops 30% in 2 weeks afterward. Yep, that's a bubble, all right. Meanwhile, back in the Middle East, the missiles are flying again. U.S. and Iran trade fresh strikes and dispute whether Hormuz is open. Let me put that debate to bed. No, the Strait of Hormuz is not open. If you get shot at when you try to go through it, it's closed. Maybe you make it, maybe you don't. But if they're shooting at you, it's closed. Glad we could clear that up. The U.S. and Iran exchanged fresh strikes overnight into Monday as they continued their tit-for-tat attacks while issuing conflicting declarations over whether the Strait of Hormuz was open to shipping. U.S. Central Command said American forces carried out a new round of attacks to degrade Iran's ability to threaten shipping in the narrow waterway. Dozens of targets were hit, including Iranian air defense systems, coastal radar sites, and missile and drone capabilities, CENTCOM said in a post on X. Tehran retaliated Monday with attacks on U.S. allies in the Persian Gulf and beyond, targeting U.S. bases in Kuwait, Bahrain, and Jordan, according to Iranian state media outlets. The IRGC said earlier that it had intercepted 2 vessels it viewed as endangering shipping in Hormuz by proceeding along an illegal route. Yeah, so they're basically shooting at each other again, left and right. Look, guys, oil, again, barely reacting here. $73.95. It's up about $2.50 this morning, or 3.4%. But, look, this conflict broke out anew, we'll say, about a little more than a week ago when oil was at $67. Now here we are at 74. $7. That's it. That's all oil has rallied on this conflict. And I would also point out that we are still stuck below this 200-day moving average. Maybe we break above that finally and prices start reacting in real time to this, or maybe we reject it and we just keep heading lower. I don't know. Maybe another peace deal any second now. Who knows? But oil still not reacting very much to this. And we've got to talk about what's going on in the Sea of Azov, guys. We have not seen anything like this in our lifetime. Ukraine damages 90 Russian ships in 1 week, and this is a day-old story. That number is a lot higher this morning. Over the course of the weekend, Ukrainian forces continued to pound Russian shipping in the Sea of Azov and the Kerch Strait, continuing a run of attacks on the logistical fleet that serves Russian-occupied Crimea and the Russian export economy. The strikes suggest that the coastal fleet in the Sea of Azov is operating without meaningful air defenses, allowing slow-moving Ukrainian drones to surveil at leisure, select targets, and maneuver for an optimal flight path for their final approach. Guys, a couple of days ago, there was one episode where something like 27 ships were hit in a span of a few minutes, which would basically mean an explosion every few seconds. All these ships were lined up, anchored right next to each other, just blowing up one at a time as they all scrambled to get underway and get the hell out of Dodge. Overnight on July 12th, Ukraine's unmanned systems forces said that its units had hit 10 tankers in the Sea of Azov, 1 ferry in the Sea of Azov, and 3 ferries near Kerch. On July 11th, USF operators hit another 28 ships, including 21 tankers, 4 tugs, and 2 cargo ships. Some were struck multiple times. Taken together with other recent actions, the attack brings the total number of Ukrainian strikes on Russian-linked ships to 90 in 1 week. For comparison, that is roughly 8 times the rate of German attacks during the toughest years of the Battle of Atlantic in World War II. That's at least by vessel count. Now, it's worth pointing out that these ships are being knocked out of commission, but they're not being sunk, at least mostly not being sunk. So, during the Battle of Atlantic, when a freighter was torpedoed crossing the Atlantic, it typically sank with a lot of loss of life. This hasn't been that severe, but as far as the number of ships being hit, we've never seen anything like it. And they're saying 90 in 1 week in this article. According to OSINT Technical, they hit another 15 vessels in the Sea of Azov last night, including 7 more oil tankers. So that brings the total to 105 vessels in 8 days that have been hit. And it's worth pointing out, if you pause on this video here, you can see this freighter in particular. These low-boy freighters, I don't know what the term for it is, but but when the Russians rushed the construction of the Kerch Bridge in order to reinforce the Crimean Peninsula, the rail bridge was built at a very low height. Most of the tankers in the world can't sail under the Kerch Bridge. And that's why these vessels have this really low profile. They're meant to sail under that bridge. So it's not like other vessels from elsewhere in the world are going to flood into the area to relieve this pressure. There just aren't that many boats that can even sail this route. And the Ukrainians have hit 105 of them in 8 days. Drones are making a mess of global energy infrastructure, both in Iran and in the Sea of Azov. All right. Meanwhile, we got some good news going on in Stellantis. I think, with an asterisk, I think this is good news. Stellantis shipments climbed 10% on growth in North America. We have not heard about growth in any auto industry or any auto company outside of Chinese EVs for quite a while. Stellantis shipments climbed 10% in the second quarter, fueled by growth in North America as the maker of Jeep SUVs and Ram pickup trucks pushes on with a turnaround plan. The manufacturer delivered an estimated 1.6 million vehicles to dealers, distributors, or directly to retail and fleet customers, Stellantis said on Monday. Shipments in North America jumped 38% as the automaker bought back models such as the Ram 1500 pickup and the Hemi V8 engine. In Europe, they rose 5%, with the company also including figures from its joint venture with China's Zhejiang Leapmotor Technology Company. So big jump in U.S., a 38% increase in deliveries. That's pretty wild there. I don't know that these are selling, but that's a big jump in deliveries. Now, the European number at 5% is far less impressive. And it's also worth pointing out that China's EV companies have been renting extra factory production capacity from Stellantis in order to build Chinese EVs in European factories. And so that 5% number includes those Leapmotor Chinese cars that they're being made in European factories. But despite the efforts, Stellantis shares have lost more than a quarter of their value since Filosa presented the new plan. Filosa is their new CEO. JP Morgan and HSBC analysts downgraded the stock this month, citing issues including rising inventories in the U.S. And that's why I put an asterisk next to this and say, I'm not entirely sure this is good news. Sure, the deliveries are up 38%. There's a lot of cars making their way to the showroom floor, but the inventories are going up along with it, which means we don't know if they're going to sell yet. And based on everything I've seen about delinquencies in auto loans and how the American consumer feels, especially since gas prices went up earlier this year, I think those cars, there's a very good chance they end up sitting on the lot for a long time. So it's not bad news here that these deliveries are climbing, but it's also not great news, at least not until they actually sell. All right, last but not least, Japan has no plans to overhaul their pension funds, asset allocation, sources say. Now, I made a very big deal out of this on Friday because, admittedly, this got my blood up, really got under my skin. I hate when people or bureaucrats or politicians use other people's pension money for their own political ends. But it looks like the Japanese were jawboning when they did this. Now they're walking it back, and the yen is weakening because of it. Japan has no immediate plans to change target asset allocations of its state pension fund, but could work within existing allowable ranges to direct more investment to domestic assets, people with knowledge of government deliberations told Reuters. Finance Minister Satsuki Kachiyama said on Friday that the government would seek ways to encourage pension funds, including the Government Pension Investment Fund, or GPIF, to make substantially greater investments in Japanese financial assets. The remark had sparked gains in the yen and bonds as investors bet billions of dollars that they could be channeled into the Japanese markets through GPIF, the world's largest pension fund, which manages about $1.81 trillion US in assets. While the government is exploring ways to boost such investments within the existing allowable ranges of the benchmark portfolio, the initiative won't lead to immediate revisions to GPIF's medium-term objective, two government sources said. So they're walking this back. Markets reacted much more than we expected, the first source said, while acknowledging that Kachiyama's remarks were not intended to imply a change in the asset allocation. The sources spoke on condition of anonymity due to the sensitivity of the matter. And this sentence right here is telling that markets reacted much more than we expected. That tells me this story about the Japanese pensions was really just jawboning. They were just trying to strengthen the yen. And it worked until it didn't. Just as soon as my TradingView chart refreshes, there we go. Come on, TradingView. TradingView wants to be slow with me this morning. There we go. Okay. So on Friday, we got this red candle here. That was the strengthening of the yen after Satsuki Kachiyama came out and said, yeah, we're going to put pension money into domestic assets that, ostensibly selling Western assets like European bonds and U.S. stocks and putting that money into yen-denominated assets. So the yen would strengthen. But then they say, no, we didn't really mean it. And then we get this green candle right afterwards, giving back most of the gains that the yen had made. This chart, by the way, is USD JPY. This chart going lower is the yen strengthening, higher is the yen weakening. So it looks like that whole episode on Friday with the pensions was little more than a jawboning episode. And we sit here at 162.2 yen to the dollar, still a historic low. Japan's got to figure something out. They have to figure out a way to prop up the yen without crashing their now debt-laden economy. Good luck. Good luck with that. Well, guys, I just want to say thank you very much for having your coffee with the Melonheads this morning. Don't forget the like button and that subscribe button so you can come back tomorrow and have your coffee with us Melonheads. Also, thank you to my magnanimous Melonheads on Patreon, Buy Me a Coffee, and YouTube members for supporting the channel. There are links down below should you feel so inclined. I'm on. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.